All right. Well, good afternoon, Joe. How are you?
Good. How are you, Mike?
Good. Welcome to another edition of the Mortgage Update with Mike and Joe. We're super excited that people have joined us again today. But obviously, before we jump into mortgage and real estate, got to talk about the Bills, right?
It's a good thing we didn't do this podcast last week. We would have been tired. Right?
Exactly.
Staying up, waiting for the Bills to draft, and then, we're not picking anybody tonight.
I know. I hear you. But, when I woke up the next day, obviously then found out that they did take this wide receiver from Florida State. Certainly seems like he's going to be a great addition to the team, and probably, the guy is a fairly funny guy. He could have his own podcast soon as well.
He probably could, right? Yeah. We could invite him on as a guest.
Yes.
It was interesting just, with the draft itself, it seemed like, of course, the knee-jerk reaction, everybody Thursday night was swearing up and down on Twitter that the Bills didn't pick anybody and traded with the Chiefs.
Right.
But overall, looking at the draft, I think people's minds changed relatively quickly as they saw the quality of the players that the Bills were able to select in the draft. So,
they
promising
filled some
things.
holes.
Right. We're in the season of hope right now.
That's right. So, all right. Well, listen, let's move on to the topics at hand. The market. And Joe, let's kind of just start with just really, as you always do, give the listeners just an update on the transactions that we did last month and what was the market update.
Yeah, unfortunately, a lot of the same. So we saw in April, on average for Monroe County by itself, 22% over ask was the average. When we go out and brought in that search, Monroe and surrounding, it was 15.65% over ask. And just a reminder, what that is if a house is listed for X and it sells for X, that percentage equals that difference, right? So in our highest over ask, we had one home in West Irondequoit that sold for 66% over ask. So it was listed for $164,900, sold for $274,000. So almost $110,000 over ask for this home in West Irondequoit. It appraised, so that's good. We did see a little tick up in the appraisal gaps. We had 5 in Monroe and surrounding counties, which has been higher than we have been. Some of those, they go in knowing that there's going to be a gap when they write that offer, right? They want the house. They're willing to cover that difference through the appraisal gap solution, and they're able to cover that difference out of pocket. Greece remains to be, one of the hotter areas that we're seeing.
So we did 22 transactions last month in Greece?
In the 14612, 1516, and 14626 zip codes. We had 22 transactions ranging from 21% over to 35% over ask. The average was about 25% over.
Okay.
So a good concentration there. From a government mix perspective, right around 5%. So those numbers still low in Monroe and surrounding. So for the Monroe and the surrounding counties, a lot of the same of what we've been seeing. Again, Greece remaining in that hot zip code area. But when we go down to Onondaga County, in Onondaga County on its own, on average was about 14% over list. So if you recall, right, we've been pretty flat in that area.
Yeah.
And so 14% over, and then Onondaga and surrounding drops down when we pull those surrounding counties into 5.2% over. So, in the 13219 zip code, which is Syracuse, but it's that Fairmount, Westvale, Taunton area.
Sure.
The average, that was the highest average over. It was about 28.5% over ask in that zip code. The government numbers are a little bit more promising with running at about 10% over versus, Rochester at the 5%. So a little bit higher there. But all in all, the market continues to remain in those higher pockets. We did have one home in Monroe and surrounding that was 13% under ask, but it was a higher listed property.
Sure.
So, typically we do see that with those higher price points that there's a little bit more negotiating. Maybe they're listed kind of where the price is expected to be at. So,
The other thing too, Joe, just to remind everyone, is obviously this data, we make it available. Obviously we'll be pushing this out. So for those of you that are listening in, you can see the details on this, but it's also, I think, a reminder that the market continues to be very competitive, which really is why it's so important for you to get your buyer, pre-approved or have them consider going with our Cash Plus program. You want your buyer to be in the best possible position to get their offer accepted. And in order to do that, you need to get them pre-approved.
Yeah, for sure.
So,
so in addition to the market, obviously we had some rate updates this week that were promising.
Yes. Yeah, I know. Because, Joe, since we spoke last on our podcast, we have seen this pretty steady, not huge, but steady, slight increase
in rates
probably the past 30 days. But, today we got some news that gave us a little bit of relief. Maybe you can kind of speak to that.
Yep. So the payroll data came in a lot lower actually than what was expected. So, the stock market kind of surged a little bit and bonds retreated. And it was really more from, yesterday or earlier this week when the Fed spoke, it was, we're still tracking inflation. We're still tracking inflation. We're not, we may need to keep rates higher for longer. If the job market remains strong, well, lower payrolls is a little bit of a weaker sign for the job market. And so now, because our Fed has become so reactive to the data, the markets are becoming that reactive, right? So they see this information that came out today is that, okay, the job market looks to be softening. So maybe now the Fed will be okay with, bringing those rates down earlier. Originally, they forecasted 5 rate cuts for the year. It's come down. I've seen anywhere from 0 to 1.
Right.
I've seen comments about rate hikes for the year, right? So it's all over the place. And, it's like throwing a dart, right? You don't know where it's going to land.
Yeah. But, I think one of the things too, Joe, again, just to remind everybody where rates are at. Rates are, they're in the low 7s, if you will, for a 30-year fixed rate loan. But just to remind everybody, that GRB, we do have this rate relief plus program. And Joe, again, just to remind everybody kind of how that program works and the benefits.
Sure. So the rate relief plus program is our lender funded 1.0 buy down. And basically we're the lender as GRB, we are paying the difference of what your payment would be based on a rate 1% lower than where your actually rate is for the first year. So for the first year, you could save anywhere from $50 to $300 a month, depending on the size of the mortgage, right? And that money goes into an escrow account, and then every month you make the lower payment, and the rest of your payment comes out of that escrow account and makes your payment whole. And it's a good savings, right? And in an environment like this where there's so much uncertainty as to what's going to happen with rates. People have been trying to predict that for 2 years, right? When rates first started going up, it's like, oh, the Fed's going to lower soon. The Fed's going to lower soon. And we seem to be, it's like us waiting for inventory, right? We're soon more inventory will be on the market. So I think that it's a good way to be able to secure yourself in a lower payment for your first year of your mortgage. And if you do refinance, you can refinance out of it using our rate relief program, which is where you can get a discounted closing costs on your refinance if you refinance with us. So that gives you the opportunity to refinance out of that rate relief plus into a new mortgage at a lower rate. And then any money that's left over in that escrow account, you get credited back at closing. So
right. And we're seeing probably 20 to 30 of our buyers taking advantage of that each month. So we're going to continue that. So moving on. So one of the things that we're excited to do is we've got some new products and programs that we have rolled out that we want to remind everyone, and also some new initiatives and new programs that we're going to roll out here on May 6th. So Joe, give everybody an idea of, we're excited to roll out this community partners program. So what's the goal of that program, and how does that work, and who qualifies?
Yeah. So, we had a program kind of similar to this back during COVID. It was our first responders program.
Right.
So we've taken that and kind of tweaked it a little bit where we want to thank our community partners, right? Those are our teachers, our doctors, our firefighters, our policemen, our EMTs, military, and those borrowers in one of those occupations, nurses, I think I'd say nurses, would receive a $600 discount off closing costs.
That's great.
As part of, if they do their mortgage with us, just because they're in one of those professions. And, we really want to be able to give back to the community. I mean, those, if you think about the 5 or 6 professions that I just listed off, they have a high impact on the community, right? They're serving our community. And so being able to give back to them, and coincidentally enough, next week is Teacher and Nurse Appreciation Week. So we're excited to launch during this time and really be able to give that. And that's going to be an ongoing promotion, right? It's for the foreseeable future. So there's no definitive end date. It does start with applications taken after May 6th. Okay. So anything taken after May 6th, they would be eligible for that discount.
Yeah. So more to come on that. Now, in addition, one of the things that Joe, you and I are both very involved with, very passionate about, is really trying to come up with solutions to try to address the inventory shortage that's certainly going on throughout the nation, but certainly right here in our own backyard, probably one of the most competitive markets in the U.S. So we're excited that we're now offering financing for manufactured homes. So maybe you kind of expand on that and why that's so important.
Yeah. So, I think people think of manufactured homes and there's a stigma. Oh, it's a house on wheels. Mm-hmm. And, when you think about a manufactured home, it is a home that's built in a factory, typically. And so when you think about the construction of that home or the construction of any home, right, if you're building it on site, your materials are out in the elements until the house is framed and there's, somewhere to put the stuff inside. So, I think the manufactured home, everything's built in a factory. It's built in a controlled environment. But what happens is it becomes much more affordable. Mm-hmm. And, when we think about the housing shortage, not only from an inventory perspective, also an affordability perspective. Mm-hmm. And, typically, with manufactured homes, the price point's a little bit lower. And, some of we have some relationships with some of these builders or manufacturers of manufactured homes. And what's coming on the market now looks a lot different than what was coming on the market 20 years ago.
Right.
And so these homes are permanently affixed to a foundation. The borrower does own the land, right? So there's the difference is the type of house that's there, whether you have a stick-built house or you have these manufactured homes on the property, everything else is kind of the same.
Right.
And so, rolling out this financing for this manufactured home gives us that opportunity to help more borrowers and help solve for some of the inventory and some of the affordability issues that we're seeing right now.
Right. And I think, obviously I know that you and I are both involved in really trying to, work with realtors, with builders, politicians, et cetera, to try to frame up various initiatives and actions that we can take to try to address this housing.
It's always been, right, there's not one solution. There's not going to be one thing that's going to get us out of this inventory crisis that we're in, right? There's going to be multiple things that need to come together, and manufactured housing is just one piece of it.
Right. Now, Joe, one of the things, as you and I know, we have a growing presence in Syracuse.
Yep.
We love the market. We have a great team there. And obviously, they have some of the same challenges there that we have here in Rochester. But it's exciting to see that they've actually developed an agency to really try to begin to tackle some of these things. Do you want to kind of speak to that as well?
Yeah, and Syracuse, they did a comprehensive housing study, and kind of what they found was that a lot of the inventory in Syracuse had been neglected for some period of time. So the residential properties, only 27% of the properties in Syracuse are considered in good or excellent condition. Mm-hmm. And then a majority of the houses in the city kind of are highly vulnerable is what they found. So property values, in Syracuse, as we talk about this, we talk about these listing numbers and the percentages over, and they've kind of stagnated within the city. So Syracuse is creating this task force to address the problem, and it's going to contain multiple individuals, but their goal will be to raise funds and give grants out for housing development projects in the city. It's called the Syracuse Housing Trust Fund Corp. So it's good to see, and I think we're seeing it in Rochester. We're seeing it now in Syracuse. I know Buffalo has a program as well. So, the cities are taking note and starting to put money back in and try to help be a part of the solution. And I think that's going to go a long way
I mean, this is all going to take time, but I think what's encouraging is that there's action. First of all, there's a recognition of how significant the problem is, but now there's, things are being put in place to do something about it. I mean, just looking at this list, you have people in Syracuse that are from the land bank, the mayor's office, county representatives. So, I mean, it's a cross section of people that are coming together for the common good as well. So, Joe, one of the things that we always talk about is, we're doing this, you and I are doing this podcast, really to keep, the realtors, the listeners, informed as to what's going on in the marketplace with rates, with programs. We are here to serve the realtor, to serve their client, to help them be successful. And one of the things we talk about every month is making sure that we're getting feedback from them on topics that they think they want to learn more about. So, please, feel free to reach out to us. And what's the best way that they can do that?
They can submit questions right online, grbbank.com/MJ for Mike and Joe. And I think that that's a good place to submit those questions. They can like and subscribe to our podcast so we can feel the impact of our work every month.
Right.
Before we do close, though, Mike, I want to talk about, so in March, we ran a promotion for March Madness, right? And our loan officers get the opportunity to have a team, and all their team members submit a bracket, and the winning loan officer chooses a charity for a donation to go to at the end. And yesterday we had the opportunity to present that donation to the charity of the choosing. And I just wanted to mention them because I thought it was very powerful what they do. And the charity was 1330. And what they do is they work with adolescents and young adults. I believe they call them AYAs.
Yes.
To help them transition from a battle with cancer back into real life, and provide them resources. And even, when you think about how vulnerable a teenager, a young adult is, battling cancer and then, having to continue on with their life. Right. And, sometimes they get that opportunity to do so. And sometimes they don't, unfortunately, like the woman who started the foundation, whose daughter, at 19 died of cancer. Right. And I think that's the part that stuck with me the most when she was speaking. And just a plug for them because, they do great things. There's opportunities to get involved and to not only just from a monetary perspective, but also they do large events and to volunteer your time and help out. So just putting that out there because I thought that was pretty powerful.
No, it's great. She's been doing it for 24 years.
Yeah.
That's a long time. So, well, Joe, listen, thanks for the great feedback. Thank you for those that joined us today. And we will see, or at least hear from us in June. Have a great day.